It's time for the Your Personal Bank Show with Ferenc Toth, President and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show. This is Ferenc, and I'll tell you what, I'm really excited because we have a guest with us today. This is the most famous person you've never heard of, and his name is John Burley. He wrote Money Secrets of the Rich, which was an international bestseller, and he also has worked with Robert Kiyosaki in the early days. He's spoken at events and stadiums around the world. He's an institutional investor. He actually came from the world of Wall Street, and as he always puts it, he's not a real estate investor. He owns a business that happens to focus on real estate. John, welcome to the show.
It's great to be here, my friend. Thank you.
That's awesome. And like I said, we're really excited because one of the things I get questions on all the time, as a financial guy, and, here in Phoenix, I get people all the time say, I'm thinking about investing in real estate because they're maybe, not happy with the returns or concerned about the risk in the markets and various things like that. And, as a financial guy, licensed and stuff, it's not like I can recommend somebody, hey, go see this person, go talk to that person. Compliance would, have a conniption fit. But as I tell people all the time, and you say this all the time, real estate investing is a misnomer.
Yeah, absolutely. Yeah, people call it real estate investing, and in that term, that would be like going and buying a mutual fund. Mm-hmm. Because real estate investing, as people are looking at it, it's not actually real estate investing. It's owning a real estate investment. And whether you're going to do one property in your whole life or one or two properties a year or do what so many of my people do is go on and build huge portfolios with hundreds or thousands of properties, is from day one you have to look at it like a business.
Sure.
And then, in today's market, hey, straight up, the markets are tight. A lot of stuff that I hear people talking about in Phoenix and the techniques they're teaching are, they're 20 years old. They
Sure.
absolutely don't work anymore at all, and they haven't worked in a long, long, long time. When we're out today, we really need to be very, very, very selective. We buy very specific properties in very specific areas for a very specific return. And the really thing we focus on, and it's my financial background, I started doing this in the early 80s. I come out of Wall Street, is, we always learned that two things. First of all, that the investment was never about the investment products. So stocks is not about stocks. Mutual funds is not about mutual funds. Commodities is not about commodities. Real estate's not about real estate. It was always about money and nothing else. It's one thing I liked about the hardcore Wall Street guys and gals is they got the game at least. And when we do real estate, it's that, we have to look at it as a business.
Right.
And the thing that we really look at as a business, it's not the price, it's the return. So today I get people always complaining, well, geez, I wish it was, really cheap like it was in 10 or 11. Well, I checked the calendar this morning. It's 19. You missed 10 and 11, and those were some great times. There was two little challenges, obviously. Number one is most people were fearful.
Sure.
And so they didn't get in. And number two, there was no borrowing allowed in Maricopa County. We were actually on a federal moratorium. You couldn't borrow money to buy real estate as an investment under any circumstances whatsoever, period. So it was cash and carry.
Right.
So the good old days aren't always so good.
Sure.
So what we buy today is we're very selective. We buy for return. And we just have a very, very specific model that we've been doing I founded the company in 89. So we've been doing this model here in the Valley for 30 years.
So, John, you talk about real estate as a business versus an investor. What do you mean by that? What's the difference?
Yeah, I think that there's a whole big, big different set of rules, and then for me, the psychology and the emotion. So,
Okay.
The average person who starts real estate today, they watch a couple TV shows. I don't know why people think TV's real. It's not. They call them reality shows because they're not real.
Right.
They're fixed. Dancing with the Stars is fixed. Come on. There's always somebody who can't dance that they carry for several shows. You do Hell's Kitchen, the cooking show. There's always some raving person who Gordon Ramsay would have never hired ever under any circumstances 30 seconds after knowing this person. Yet he keeps her on for 10 weeks because she's great for the ratings because she's so psychotic.
Right.
These fix and flip shows, they're not real. They're not true. The numbers aren't real. The timelines aren't real. They do them actually as a way to get around the FCC guidelines because the FCC requires if it's a infomercial, you have to actually factually have the truth. Where on a TV show, you can do anything you want. So I think people have expectations that aren't real. They don't understand the formulas. There's mathematical formulas that we use in all of our real estate transactions, just like any normal business would. Mm-hmm. So, first of all, people need to know the numbers. They need to understand that in today's market, if you're doing a flip, off the MLS in Maricopa County in 2019 in October, you're not going to find a flip house in a neighborhood that you'd want to drive into in Maricopa County today. Those are bought off-market, deep off-market, different expenses, different systems, different models. Because in different markets, we got different things. When we're buying for cash flow, which is primarily what we do, we're long-term people, the cash flow side. We raise money when we receive the money to acquire the properties, we make money on the raise, just like Wall Street does. We then hold on to the property for long-term for cash flow. In our normal $250,000 house, $350,000 house here in Maricopa today, a rental grade property, as we would call it, an investment grade property.
Sure.
We make $250,000, $300,000 over the next 10 years with it. And what
Excellent.
we're buying for is the return, and then we're managing it like a business. So the person who does the flip without the numbers, their odds of success are very poor. Basically, they need to get lucky. The market needs to go up. And I've listened to some of your shows. I mean, they're just gambling.
Right.
Yeah. The second one is what people do is they buy a couple rental properties, but then rather than actually learn how to manage a property, in other words, actually learn the business, they hire a real estate agent.
Right.
Real estate agents are amazing. I know many of the highest end people in the valley. There's also a lot that aren't amazing. Sure. And then they hire a property manager. Now, there are a few people who became a real estate agent to become a property manager. But as you and I know, most didn't. They became a property manager because they couldn't sell in a boom market.
Okay.
So you just hired a failed salesperson to be effectively the president of your company. Your operations person is a failed salesperson.
Okay.
How would that work in your market, in your business?
I don't think that would work in most any business.
Yeah, it wouldn't. And that's what it is. So we just teach people the models of if you are going to use a property manager, how to actually find the right one.
Okay.
But mainly how to actually learn the model and the system. See, everything we do is a system. Everything is a model. We worked the kinks and the bugs out about 30 years ago. We modernize it, we upgrade it, we continually grow and change with it. But the core system was set up and designed like a company out of Wall Street, like a private equity company, which we are. We're very unique, as you know, from most of Wall Street.
Sure.
Most of Wall Street just works on fees.
Right.
Meaning whether you make money or not, they still make money.
Right.
And there's not a lot of incentive for them to make money. And people go like, well, these movies, The Wolf of Wall Street and Wall Street, are they true? And it's like, well, yeah. On a high level, yeah.
Sure.
I mean, it's not about win-win. It's not about making our clients money. It's not. It's not how they're taught. They're taught to generate the highest levels of commission.
Sure.
We do. We're 2% of the marketplace. So 2% of the Wall Street private equity companies actually work for returns and not for fees. So what we do is we only make money if we make money. So our system has to be incredibly good to where literally every property out of the gate makes money.
So if somebody's considering real estate, or they've been doing it and maybe they're a little frustrated because things haven't worked out for them. I understand you have an event coming up in November here in Phoenix. Yeah,
we have a real estate investors training. I only do 3 public events a year. They're here in Phoenix area. It's November 1st through 3rd. And we're going to be teaching 2 foundational things. The first skill is how to get the money to do the deals. That's more important than the deals. Okay. I see so many people, they spend all their time looking for deals and they don't have any money. You're wasting your time.
Sure.
Okay. And yes, you can do deals no money down, and you can do deals without qualifying, et cetera, et cetera. And you can do all that. And we do those. I've done about 450 of those creative financing deals. But they're a small portion of what you can do. So what we do is we teach you how to raise the money first, then find the great deals. And when you get those creative deals, take them. However, your bread and butter is going to be having money to do deals in a regular way. So it's November 1st through 3rd. It's here in Phoenix, Arizona.
How would they contact you?
2 ways you can do it. The easiest one is just go to John Burley, JohnBurley.com. There's a slider at top. Just click on the event. They'll give it to you. You can also call Debbie at my office at 623-561-8246. We're a local company. And you can also email Debbie, DEBBIE, at johnburley.com.
Well, thank you, John. We're going to have him on for the next segment, so stay tuned. And for my compliance folks, I can't officially endorse one investment or another, but I can say this from a personal standpoint. I've attended several of John's events, and they're definitely different than any other real estate investor event I've attended. You will learn how to run a business, and whether it's a real estate business or any business, I tell people this all the time. Get the education, get a mentor, and learn from them instead of making the mistakes on your own. This is Your Personal Bank show, contact us at 866-515-6280 or yourpersonalbank.com. Stay tuned for the next segment. We got some more with John.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference, and we have a special guest, John Burley. Again, the most famous person you've never heard of. He's worked originally with Robert Kiyosaki, Rich Dad, Poor Dad in the early days. He's an international best-selling author, Money Secrets of the Rich. In fact, years ago, he helped contribute to a book called Wealth Building 101, written by a gentleman most of us know, Donald Trump, back before he was president, of course. And in fact, John, I understand you've spoken in stadiums around the world with folks like Zig Ziglar and others?
Yeah, we've been really, really blessed. We had a lot of success. The book Money Secrets of the Rich sold over 1 million copies. Actually, at one point, it was the number one selling book. We outsold Harry Potter.
Wow.
My kids wanted the Harry Potter book. And spent 3.5 years top of the bestseller list, so businesses. So it really was exciting. We've spoken all over the world. I made a choice as my kids started to get a little older, is we really curbed down and back down. I only go out now once or twice a year on the road doing some of the world tours, the international stuff.
Sure.
And my time is enjoying my life, but then also running my private equity company.
Right.
You and I were just talking about this a minute ago. It's one of the things like the students say all the time. It's like, hey, the greatest thing about John is he's one of the few guys who's an active practitioner.
Right.
We've got holdings in 12 states. We've done investments in a couple of different countries. We're one of the largest players there is, in buying and holding these properties for the long, long term. And they say that's great, but it's also the worst thing about John is he's an active investor.
Right.
Because I don't run around teaching all the time and doing his education. The tours were great, and I know you were talking. I probably my favorite guy, and I always thought he was just a beacon in the industry. He really was Zig Ziglar.
Sure.
I shared the stage with him, and by that I mean we were on the same docket on a big tour in either an arena or a stadium. And he really liked to work out. It was kind of funny. Him and Tom Hopkins and I, we worked out every day. And back in the days, a lot of guys didn't. And so it's like we would usually mention. So all these students know, wow, these three guys are going to be in the gym at like 6 in the morning. And like virtually never did anybody come down. I mean, if I had been a student, I'd have been there first thing.
I think I would have too.
I mean, got these guys for an hour and a half, 2 hours. Let's ask. But I always thought Zig was amazing. He was the same guy off the stage as on the stage.
That's awesome. He was always one of my favorite speakers. I got to listen to him at least 2 or 3 occasions.
Yeah, I went out just about 3 months before he had stopped teaching. One of his last talks, I actually flew out to see my old friend and took my son with me. And it is amazing to see from the audience, but it's also great to see from the green room. But my favorite is always the side of the stage. Mm-hmm. And my son's like, Dad, haven't you seen this guy, like 20 or 30 times? It's like, yeah. Heck, John, I've got his talk memorized. I think I can do the accent, and I know I'll hit all the punchlines. And he's like, why? And it's just like, look, when greatness is available to you, just one more time. And I wanted to see my dear friend one last time.
That's awesome.
And it was the last time I saw him. So.
And John, I'm glad you brought that point. And that's why I invited you on the show, like you just said, when greatness is available to you, and that's why I asked you to join us here. If you're thinking about in the real estate world, you want a mentor, somebody to learn from. Like I said, I've attended his events. It's life-changing. It's different than anything else you've ever been to. You learn how to run a real estate business. And you have an event coming up, I understand. Yeah,
November 1st through 3rd. It's here in Phoenix, Arizona. You can go to the johnburley.com. 623-561-8246 is the phone number. You get a ticket. You can email Debbie, Debbii, at johnburley.com. The events are very unique. If you've been to a real estate event, if you've not been to real estate events, I can tell you straight up for sure, this will be like no event you've ever experienced, and it's not hype.
What are you going to focus on? What are they going to learn?
Well, what I do is I look at real estate foundationally different than anybody I've ever met that spoke in my entire life. I look at it entirely as this is a monetary transaction, and this is about money and about nothing else. It's not about real estate. It's not about get rich quick. Get rich quick never worked, never will.
Sure.
We teach you how to monetize that on every single deal. You make $10,000 up front. Whether you keep it, flip it, whatever you do with it, before you make the written offer, before you close escrow, before you rehab, you get $10,000 cash on every transaction, and I've done it on thousands.
That's interesting.
Yeah, I take a model out of Wall Street. Wall Street has their flaws, like every industry. They also have a lot of things they know how to do well. And the one thing Wall Street knows how to do really well is make money for Wall Street.
Sure.
So we incorporate that piece, and then we acquire the properties, and then we focus on just making profits for them, making profits on them. So we're going to teach you how to foundationally look at real estate completely differently.
So, in other words, run a real estate business, not just be an investor.
Yeah, and it's a completely different mindset. We spend a lot of time on the psychology and emotions. We're actually going to teach you verbatim, word for word, the presentation that I use, whether it's with my friends and family, whether it's with country club money, whether it's with institutional money, which we work with a lot of institutions. I'll show you word for word, verbatim, the presentation we do, the talking points we use, and I'll clue you in. If you're listening out there and you're trying to get money to do real estate and you're talking about real estate at the rate of return, you're screwed. You are dead wrong. That is not how you raise money. Not how you do that. And we show you how to do it in a compliance mode. We'll show you the different 504, 505, 506, the JV models, the different models that are available out there, what the compliance rules are for them, because it's very specific. And you've known me for a long time. I mean, we dot the I's and cross the T's, and we run a very straight line. I'm high profile in the investment world, and so I've got to be in compliance with what we do. So we're going to teach you how to raise money so you can actually do all the deals you want for real and get paid $10,000 up front. Then what we do is we teach you how, based on what your niche is, which for some of you like, my niche, if you don't know what you're buying, you're already in trouble.
Sure.
So we teach you, whether you're doing buy and hold, whether you're doing quick cash, whether you're doing owner financing transactions. We teach you the exact properties we're looking for, not just the price range, but the specifics, the neighborhoods, the bedroom size, the specific house. Some houses get a much higher return than others.
Sure.
Okay, and for many of us, look, a lot of people on listening right now, you've done really well in life. We're not looking to buy a second home to vacation in or for you to live in. We're looking for an investment-grade property. It's a different property than the one we would live in usually. And we're going to teach you specifically how to buy it, and more importantly, in this market. And look, straight up, if you're doing real estate and if you haven't figured out the market is tight and deals are harder to find than the quote-unquote good old days, well, then let me just give you a little taste of the truth. They are.
Sure.
And we're going to show you specifically how we're finding them in today's market, how we network, the marketing campaigns we do, and where we go. We get some deals off MLS, but it's a small percentage these days. The MLS is just a little too pricey in most cases. There's exceptions if you look for return and not price, and we'll show you those.
And John, like I said, I asked you to join us because I get asked this all the time as a financial guy. People are looking at, well, what do you think about real estate? Or I'm considering investing in real estate. Or they did a property or two and they're frustrated and things aren't working like they thought they would. And, with my license and stuff, I can't recommend anything one way or the other. But what I do say is, look, real estate, like any other thing, is a business. It's not an investment. It's a business. And if you're going to start a business or operate a business, you got to learn how to operate that business.
Right.
One of the best things ever happened to me early in my career, my first business was a retail business, and I got advice from SCORE, from the Small Business Administration.
Nice.
I had a mentor for 2 years. Best thing I ever did, best money I ever spent, and it was the smartest thing I did in learning how to operate a business. So that's why come to the event. Is there any cost for them to learn how to run a real estate business?
There's an early bird opportunity available. It's $147. I do 3 public events a year.
Okay.
That's it, here in Maricopa County. 2 of them are entry level, not on content, but on the investment, and this is one of them.
Okay.
This is the last event I'll be doing until March of next year, so this is the chance to get in.
Sure.
And a couple things. So we will literally take the people, as you know, because you've been there, to my bricks and mortar real estate investment company. So you will see what a real company looks like, how it's situated. The thing people are always stunned is like going, wow, where's all the people who work for the seminar business? It's like, because they're not there, because it's not our business.
Right.
We mainly do the investment side, and we're the only people who truly teach the private equity model, which is what we do. We bring an attorney in who show you how to do the Anderson structures, and this is really important. He's not selling anything. Mm-hmm. You've met him. He's a great guy,
yes.
Bob.
Yeah, Bob's great.
We'll also be going through and literally teach you the money-raising talk, and you'll be going through it, learning it, role-playing it, breaking into small groups and with my team, and you'll be getting it down verbatim so you can leave and go raise money and get $10,000 per deal up front like so many of my students have. And you'll also, one of the neat things is you'll network with. And if you're used to being at real estate events where people don't do it, this ain't it. You're going to find people that are doing deals all over. You'll meet several people that are Century Club members. That's people who have over 100 properties in portfolio.
Okay.
And you'll meet people who have been working with me for 5, 10, 15, 20-plus years who are back at the event to learn more, to keep going.
Awesome.
So it's really, really high-end. It's a little less than $50 a day. There's some tickets that are still available, although it's just about sold out.
Okay. One more time, how do they get the education?
JohnBurley.com, JohnBurley.com, 623-561-8246, or you can email Debbie, Debbii, at johnburley.com. She's our facilitator. She'll take care of you.
Again, I can't tell you what to invest in, but if you're considering real estate or you're in real estate and you're having troubles, get the education you need. I know of no better source of that education than John Burley. Highly recommend getting the education. This is Ference, Your Personal Bank Show. Contact us, 866-515-6280 or yourpersonalbank.com. Stay tuned for the next segment. We'll get into how to have access to money through Your Personal Bank.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome to Your Personal Bank Show, and I just want to thank again John Burley for joining us in the last two segments. That was some awesome information he shared, and like I said, he's talked about how to run not as a real estate investor, but a real estate business. If you want to learn more, I would say if you're going to do anything like that, run a business, learn, get the education, get a mentor. Because otherwise, most small businesses, as we all know, fail in the first 5 years, according to the Small Business Administration, and a real estate business is frankly no different. So get the education you need. And I know of no better source for the education. I've attended myself personally several of his events, but contact him at johnburley.com or 623-561-8246. He has an event here in Phoenix coming up on November 1st through 3rd. Great opportunity. He only does 2 or 3 of these a year, so you certainly want to take advantage of that. I want to talk about a concept that really fits in a lot of what John was just talking about and with the Your Personal Bank concept and all that. And one of the keys to success financially is access to capital. Now, whether you're a business owner or an individual, it really doesn't matter. Access to capital gives you options in terms of opportunities when they present themselves. You see a great opportunity, you want to take advantage of it, and there's nothing more frustrating when you know in your gut that this is a good opportunity for you, investment-wise, expanding your business or whatever it may be, and you just don't have the funds available. Or if you do have the funds, there's significant penalties or taxes, consequences involved in accessing those funds. And so those penalties, those taxes, basically circumvent your ability to take advantage of the opportunity. Takes away from what it would have been. And that's frustrating. It's incredibly frustrating. And like I said, the Small Business Administration states, we all know most businesses fail first 5 years. And they state one of the two key reasons is lack of knowledge, know how to run that business. That's why I recommend the education for anything you're going to do and have a mentor. And secondly, lack of capital. And that's why Your Personal Bank is so powerful and so important for a business owner particularly. The second thing is, and we all have these, again, whether you're a business or an individual, does not matter. We all have expenses. We have bills that have to be paid. We have bills that come in on a regular basis. We also get surprises, unexpected expenses. Folks, that's life. And, financial literacy for the ages. People will say you should have 6 months. You've probably heard this, 6 to 12 months of emergency reserve, readily available capital for when the roof breaks, you lose your job or business income, or somebody gets sick or hurt or can't work, and any of those kinds of things that happen in life, medical emergencies, whatever that may be. You have to have access to funds, access to capital that is not encumbered or a problem in terms of accessing those funds because there's a penalty involved or a tax consequence, or, I've seen this happen. The markets, you're primarily in the markets, and you've got your accounts going down because the market's taking a downturn. It's taking a correction. And one of the things I say, I've been doing this 22 years. I've seen 3 cycles. Don't be surprised when the next cycle that happens. It's going to happen. And what if you need money on the bottom part of the cycle? I've seen it happen. It devastates people. 0809 was an extreme example, but certainly happened to people where they had majority of their money invested, market-related, lost their job, or their business failed. Why? The economy was bad. Okay, so now they still needed money. They still needed to live, keep a roof over their head. One needed to eat, that kind of good stuff. And they were having a hard time finding a replacement income or another job or various things, so they started dipping into investments and retirement stuff, and people borrowed from 401ks. It was rampant. It was very common. And on top of all that, they might have been paying penalties or taxes, depending on the situation, but guess what else happened? The value of the asset had dropped in half in many cases. So now they were selling on a low. So it's kind of like kicking a dog when it's down, okay? When you have or need access to funds and the cycle is running against you, and by the way, when does it typically happen that you need access to funds? When everything's great? When the economy's going strong, everything's going up? No, most people are making more money. Their job, they're probably getting raises. Their business is going well. I mean, income is coming in, income's flowing. Things are good. It's when the economy is not cooperating. The market is... That's when people have greater needs for money in many cases, and their assets have now lost their value. So again, thinking like that banker, as I talk about all the time, protect your downside. What's your recourse? So again, access to funds is key. I'm going to touch on this further, but like I said, contact us at yourpersonalbank.com or 866-515-6280 for more information. See if this can be a good fit for you. Again, I say this all the time. If you've looked at this, do yourself a favor, look at it again. A lot of things have changed in the last few years and improved. Products improve, things change. If you haven't looked at this, as most have not, do yourself a favor to do so. Take a look. But anyway, how many people have access to funds, ready access to funds, where there's no loan application, no credit check, you have guaranteed access to the funds? What does that mean? Well, it means you control your money. See, control, I believe, is more important in many cases than many other factors. It goes back to the whole thing about, I get this asked all the time. Should I pay off my house? That's a question that happens constantly. Now, strictly from a financial standpoint, in many cases, if somebody's got good credit, low interest loan, all that good stuff, maybe they have the mortgage deduction, although it's not the same as it used to be. With the new tax laws that are in place now, the IRS, I read an article not too long ago that they estimate that over 90% of Americans will not take advantage of the mortgage deduction because the standard deductions have increased significantly. An individual, $12,000. A couple, joint filing married, is $24,000. Standard deduction. Now, understand, I'm not a tax advisor, and I'm going to tell you, check your situation out. I highly recommend you talk to your tax advisor about your situation. But again, the IRS has estimated over 90% of folks will not take advantage of the mortgage deduction because, with the new tax laws, because their standard deduction is going to be higher than what their mortgage interest would have been for the year. Now, if your standard deduction's higher or greater than your deduction, you're going to take the standard deduction. I mean, it's just obvious. Primarily, the people who are going to take advantage and still be able to use the mortgage interest deduction happen to be business owners. That's the most common person that's going to still take advantage of that. Why? It's quite simple. Most business owners have a number of deductions through their business and through their business operations. And John Burley talking about running your real estate, not being a real estate investor, but being a business, being an active business. By the way, you want to be an active business defined by the IRS. you get a significant amount of deductions. And therefore, that might entitle you then to continue to take advantage of your personal mortgage deduction, for example. Again, everybody's situation is different. You need to look at this. One other thing about since I'm on this, the tax thing. With these tax rule changes, for years, business owners were told to be an S or S Corp or LLC. And that was accurate. The reason why was the personal deduction rates, the personal tax rates were lower than the C corporation tax rates. They used to be 35%. Well, the new tax laws changed that, reduced it from 35% to 21%. What does that mean? Well, basically, as a good rule of thumb, I'm going to share with you in the next segment why you should consider being a C Corp versus an S Corp and save on your taxes in the future. It's called Section 199 of the IRS Tax Code, and we got a calculator, an analyzer, I should say, that I can share with you for free of why you should be maybe a C Corp versus S or LLC. Tune in the next segment to find out. Contact us at 866-515-6280 or yourpersonalbank.com. This is Ference. We'll see you next segment.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. This is the fourth segment, and we've been covering a lot of great stuff. We had an awesome guest in our first two segments, John Burley. Highly recommend if you missed it, go to the Money Radio 1510 a.m., go to the podcast and listen to the first two segments with John Burley as our guest. The most famous person you've never heard of. He's a very successful real estate investor, educator. He has an event coming up November 1st through 3rd. You can contact him at johnburley.com or 623-561-8246. He will teach you how to run a real estate business versus being a real estate investor. There's a big difference. So go to his event. I've done that myself. Get the education you need. If you're going to be in real estate or you are in real estate, it's not working for you like you like. We have so many people that come to me asking that. I tell them all the same thing. Look, I can't recommend anything for you or who to talk to, but what I can do is say, look, get the education. This is a business just like any other business. If you're going to pursue this, get the education, get the mentorship you need. I did that with my first business. I had a retail plant nursery in Glendale, and one of the smartest things I ever did after the first year, I was struggling. I was a new business owner. I contacted the Small Business Administration, and there's an organization called SCORE. They gave me, SCORE is basically made up of retired, successful business owners. They connected me with a retired retail business owner who became my mentor for the next 2 years. And we met monthly, and we went over our business, and he gave me advice, and it was one of the most valuable things that I ever did in terms of business. So, if you're going to go into the real estate business, I can't think of a better mentor or educator that you could go to that I know of than John Burley. Contact him for that. We were talking about access to capital is the key. Well, it's one of the big keys to financial success. And access to capital is so important because you can then take advantage of opportunities or pay expenses as you need them, or take care of emergencies when they happen. And folks, they're going to happen. That's life. Emergencies occur. Be prepared for it. Market corrections and cycles occur. Be prepared for it. Don't be surprised when these things happen. Be prepared. Having access is the key. And Your Personal Bank is one of the most powerful tools. See, Your Personal Bank works both short-term and long-term. That's why I'm such a fan of it, why I use it myself personally, for our family personally, our business, and so many of our clients. It takes care of those short-term cash flow needs. Again, opportunities or expenses, emergencies, whatever, and allows you to grow money, tax-favored, long-term for retirement. It accomplishes both at the same time. See, other investments, you can put money in an account. It can grow. But if you access it because you have an opportunity or you have an emergency, you, one, may have tax or penalty consequences, okay? Secondly, you lose the opportunity of that money to grow for you, compound interest going forward. Last week's show, if you don't understand the power of compound interest, I highly recommend going back to the podcast and listening to that. It's moneyradio1510.com. Go to Your Personal Bank Show and check it out. We spent 2 segments on compound interest and the power of it. You want compound interest to work for you, okay? Not against you, because if you have debt, it'll work against you. But my point is access to capital. Let's get back to that. Again, a key financial concept. How many times, you're a business owner, you're an investor, you're an individual, whatever, and you need money. And do you have access to capital where there's no loan applications and no credit checks? Because here's the thing. Why is that so important? And you have guaranteed access to funds that what happens is you control your money now. Why is that so important? Well, it's real simple. Typically, the times you need money is when things are not the greatest. I think it was Mark Twain who said, a banker is a person that'll give you an umbrella when the sun is shining. In other words, when you don't really need the money, they're happy to loan it to you because you're a good risk. You're a good credit risk. But when you really need the money, the banker doesn't want to give it to you either because you're too much of a risk. Okay? Don't count on them. So don't go count on the situation, well, I've got good credit, I can get access to these funds, blah, 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 blah. That can all change. And if your financial situation or your income situation changes dramatically, that can all go away in a puff of smoke. You want to have access to funds where there's no loan application, no credit check, you have guaranteed access to your funds, which means you gain control of your money. Now, you want to have a situation where you can access funds where the loan payments. See, a lot of people do line of credits and things like that, and those are all fine and well. But the thing about that is those require monthly payments. Well, if your financial situation is such that you have an emergency and you can't swing those payments, bad stuff happens, doesn't it? So why not have access to money where certainly repay it if you can, but there's no requirement to. There's no monthly payments. You can repay the loan on your schedule. Again, you gain control of your money. See, we talk about this using insurance as the financial tool, one of the primary financial tools for your personal bank. Why do we use the insurance tool? A lot of reasons. Compound interest, no risk of loss, all those different things. You don't want to borrow against an asset that can lose value, okay? Tax favor growth, and all that kind of stuff. But here's the thing. You want to have the tool where the death benefit is the collateral, okay? Why? Well, feasibly, you could access the funds. There's no, like I said, there's no requirements to pay back the loans. Of course, if you can, you should. You want to earn interest instead of pay interest, of course. But there's no requirement. And so that gives you flexibility, control of your money. And by the way, ultimately, if you don't pay the loan back, the loan's paid off when you're gone. The death benefit's just reduced by the amount that's owed, okay? Now, can you mess this up? Sure. What are the limitations? Well, I'll talk about a couple of them, but if you want to know more, contact us at yourpersonalbank.com or 866-515-6280. We can share with you the positives and the trade-offs. I mean, it's, again, not for everyone, but certainly take a look at it. Here's the thing. What are the limitations on a policy loan or how much funds you can access on one of these personal bank contracts? Well, it's quite simple. Think about a traditional bank. What is the fuel for a traditional bank? Deposits, money, right? Now, the more money a bank has, the more loans it can issue, the more income payments it can receive, the more profit it can make, right? It's quite simple. Now, if you own the bank, do you want a lot or a little money in it? Well, that's pretty obvious. The more, the better, right? Now, here's a common mistake I see when people operate your personal banks. They treat their personal bank like an ATM machine instead of an owner. In other words, they constantly withdraw the maximum available and contribute the minimum. Now, will the personal bank policy still work? Well, the answer is maybe. it does depend on interest credited and loan amounts you take and how much time. And you may have to add additional funds to avoid it collapsing or lapsing and things like that because, you've just taken out too much and contributed too little over too long a period of time. That happens. You're certainly not maximizing the capability, of course. And that's why I say, should you repay the loans? Yes. If they're not required, why? Again, I go back to the Small Business Administration. Over 50% of new businesses fail in the first 5 years, according to the Small Business Administration. Primary reasons: lack of know-how, lack of knowledge, and lack of capital. Capitalize your personal bank as much as you can, as much as you're able, to take advantage of opportunities, and then you can avoid paying penalties or taxes or selling an asset at a low point due to emergencies because you have access to capital. It's one of the key financial keys, for anyone in terms of being successful over time and eliminating stress. I haven't talked a lot about stress today. I have in other times, but I'm going to tell you, we all know this. Number one cause of disease is stress. Number one cause of divorce is money problems. Contact us for your 866-515-6280 or yourpersonalbank.com. We can help enhance dramatically your financial future, give you access to capital, reduce stress in your life. That's one of the biggest things we all want. And we can talk to you about how this can work for you. Check it out. See you next week. Tune in Tuesdays at noon to the Your Personal Bank Show on Money Radio, 1510 AM and 105.3 FM, or go to moneyradio1510.com.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.